Before you blow your first account, or even pull the trigger on that meticulously studied trade, there's something hidden in the background, waiting, watching, and ready to take you down from the inside. No, it's not the market. It's you. And here's a harsh truth. Most traders never get told the market doesn't care about you. It's not out to get you. It's not rooting for you. It doesn't even know you exist. The market is just doing what it does. What destroys traders isn't a bad chart pattern, or a faulty strategy. It's how they respond when their emotions take control. If you've ever stared at a bleeding position and thought, just a few more points and it'll bounce, only to watch it dive deeper, then you already know exactly what this means. That brief moment when logic gives way to emotion is when the market stops being your competition and you become your own downfall. That's why mastering your emotions isn't some feel-good add-on to your trading strategy. It's the core of everything. Without it, your edge means nothing. You could have flawless technicals, bulletproof risk parameters, perfect entries, and still blow it all in a moment of emotional weakness. And here's the wild part. The collapse often begins long before you hit buy. Maybe you woke up annoyed. Maybe you had a fight with someone. Maybe you're running on 2 hours of sleep. That slight crack in your emotional armor, it follows you right into the charts. Suddenly, you're overanalyzing, doubting yourself, or worse, chasing the market. Every time you open a trade, you're battling in two arenas. One is the actual market with its candlesticks and price action. The other is inside your head, where emotions rise and fall like tides. Most traders only pay attention to the first. That's why most fail. Think of a sniper. His job is to stay composed under pressure. He can't afford to shake, breathe erratically, or let adrenaline spike. That bullet has one shot. Now picture him aiming at a moving target while someone yells in his ear. His palms are slick with sweat, and the wind keeps shifting. That's you trading with no emotional control. Here's what many traders don't understand. Emotions aren't just fleeting sensations. They alter your brain's actual functionality. When emotion takes over to your prefrontal cortex, the part responsible for logic and planning shuts down. That's why you suddenly take trades you swore off, or widen stops you promised not to touch. It's not forgetfulness, it's neurochemistry. And let's be real, sometimes you crave the chaos, that adrenaline rush of catching a big move, the excitement of a fast-developing setup. It feels like a high. At some point, the market turns into a casino, and you become the gambler who keeps muttering, just one more hand. You call it trading, but deep down, you're chasing a feeling, the danger. Your brain starts to reward reckless behavior the moment it works out once. Maybe you widened your stop loss, and the trade came back in your favor. Now your brain says, look, it worked. Let's repeat that. And that's how damaging habits are born, not from consistent failure, but from the wrong kind of success. Here's the thing. Most traders don't blow their accounts because they never see wins. They blow up because they win for the wrong reasons and start believing they've found a hack. So, what's the real first step toward emotional mastery? You have to drop the illusion that you're a fully rational being. You're not. You're a human being carrying thousands of years of evolutionary instincts, and none of those instincts were designed for currency pairs or chart patterns. Your ancestors weren't deciding whether to hold a breakout or close half the position. They were deciding whether that rustle in the bushes was lunch or a predator. When a trade goes against you, your body reacts like your life is on the line. Your heart rate spikes. Your breathing gets shallow. Your vision tunnels. That's why revenge trading happens. Your body's gone into fight or flight mode, and trading discipline doesn't stand a chance. But here's the uncomfortable reality. The traders who last the top 1% aren't those who never feel fear or greed. They're the ones who recognize those emotions, but don't let them steer the wheel. Take a trader from 2014. We'll call him Daniel, who worked at a small proprietary firm. He wasn't the sharpest, nor the most talented, but Daniel had something most didn't. He never allowed emotion to control a trade. His win rate wasn't jaw-dropping, but he rarely had catastrophic losses. Over time, while more talented traders burned out, Daniel quietly grew. Why? Because while others tried to conquer the market, Daniel focused on conquering himself, and that made all the difference. This is the key. Emotional mastery doesn't mean eliminating emotions. It means refusing to give them a seat at your trading desk. So, here's the real question. Do you want to be a trader hooked on the rush of winning, or a trader obsessed with following the process? One leads to fleeting dopamine hits. The other leads to longevity. You don't get both. And here's something rarely said out loud. Your objective as a trader is not to pull profits every single day. It's to preserve your mental capital, because once that's gone, your financial capital won't be far behind. When your brain starts associating trading with anxiety, frustration, or urgency, the game's over. You'll sabotage yourself without even realizing it. Trading isn't about being right. It's about showing up as the same version of yourself every single time. Same level-headedness, same routine, same patience. Because the market will test you. It'll flash an ideal setup right after a loss just to see if you'll break your rules. It'll move in your favor just enough to tempt you to take early profits. It'll dip half a pip below your stop, then surge without you, daring you to chase it. If your emotions take control, till you've already lost, even if the trade ends in profit. So here's something to carry with you. As we go further, the market isn't your main enemy. You are. Every time you hit that button, it's you vs yourself. And if you can win that internal game, the external one becomes much easier. There's a brutal truth in trading that many don't realize until it's far too late. The real threat isn't the market. It's you. And not in the cliché way that gets thrown around constantly. This is deeper. It's about how your own brain subtly manipulates your behavior. Blind spots in your thinking distort your actions, often without you even noticing. These aren't occasional lapses in judgment. They're deeply ingrained biases universal to all humans, and in trading, they're lethal. The harsh reality is this. Markets are structured in a way that punishes emotional predictability, not because the market is out to get you, but because it reacts to patterns. If enough people behave in emotionally predictable ways, their capital ends up in the hands of those who don't. And most traders, they all make the same mistakes. Let's begin with one of the most damaging: confirmation bias. This is the built-in urge to seek out only the data that confirms your existing opinion. You've likely done it without even realizing. You decide a currency is bullish, so you only look at bullish analyses, follow traders who agree with you, and dismiss any conflicting views. At that point, you're not really analyzing the market. You're just shielding your ego from discomfort. But the market doesn't care about your ego, and it definitely won't reward it. Back in 2003, behavioral finance researchers studied this exact pattern. They discovered that traders given both bullish and bearish perspectives would almost always spend more time engaging with the one that matched their existing bias. They actively ignored information that could help them simply because the truth felt too uncomfortable. That's why traders tend to let losers run longer than winners. They're trapped in a mental tunnel where only validation exists. But here's the more dangerous part. Confirmation bias doesn't just distort your thinking, it accelerates your failure when the market turns. Imagine you're convinced the USD is about to break higher. You go in heavy, but price starts falling. Instead of accepting what's happening, you scramble to find articles saying Euro USD is about to pull back just to justify staying in. You find some obscure analyst with no real track record calling for a reversal, and suddenly you feel justified in staying in the trade. But the market doesn't care about your rationale. It continues its dive, and by the time you're forced to close, you've not only taken a financial hit, but also drained your emotional capital, making it harder to remain composed the next time you trade. Next up is another bias, just as harmful, and one you've likely fallen into without even noticing: the sunk cost fallacy. It's the urge to throw more time or capital at a bad situation simply because you've already invested in it. In trading, it surfaces when you've waited hours for a perfect setup. Finally enter, and then the market turns against you. Instead of exiting, you say, "I've waited too long for this. I can't get out now." But you're holding on, not because it's the wise move, but because admitting it was a waste feels worse than taking the loss. Here's the uncomfortable truth. The market doesn't care how long you stared at the screen or how emotionally invested you are. It's indifferent to whether you've been analyzing a pattern since 2 a.m., like it's the climax of a movie. Your time means nothing to the market. What counts is the present price action. Professional traders know how to cut a loss quickly because they've trained themselves to prioritize precision over emotional attachment. Then there's recency bias, the tendency to overvalue recent outcomes over longer-term data. You win 3 trades in a row and feel invincible. You lose 3 in a row and suddenly think your edge has vanished. Your judgment becomes distorted by short-term results, and you begin reacting emotionally instead of objectively. This cycle turns traders into emotional pendulums swinging between overconfidence and self-doubt, and it doesn't stop until your account does. Recency bias is the reason traders often crash accounts right after a winning streak. The high from recent success lowers your defenses. You take on more risk. I forget the randomness of the market and mistake good luck for skill. Then, one wrong trade wipes out a week's progress or more. And here's the sinister twist. These mental traps don't feel emotional when you're caught in them, they feel logical. Your mind dresses them up as reasoned decision-making, when in fact, you're just running on a comfort-seeking autopilot that's completely divorced from reality. If you're serious about mastering emotions in trading, saying "I'll be more disciplined" isn't enough. That's like telling someone to drive perfectly while blindfolded. Just focus on the road. It sounds good, but it's useless without a system that removes the blindfold in the first place. You can't just say "stay focused" while blindfolded. You have to actually take the blindfold off. And that means putting yourself in situations that force you to face your mental shortcuts. For confirmation bias, set a rule before entering a trade. Write down at least 2 valid reasons why it might fail, using objective market data, not vague worries. For sunk cost fallacy, train yourself to exit trades early, once your initial reason for entering is no longer valid, even if it means taking a small hit. For recency bias, maintain a trading journal that emphasizes long-term trends and behavior, not just the last few trades. Knowing your cognitive biases exists isn't enough. The trading world is full of people who can name every psychological pitfall, yet they continue making the same mistakes because they never apply that knowledge when it counts. Awareness without action is just another flavor of self-destruction. True emotional control isn't about becoming some emotionless, mechanical robot. It's about being so in tune with your internal responses that you recognize the trap before it even appears. Because the danger of trading psychology isn't just losing money, it's conditioning yourself to believe false narratives until the market empties your account, and you don't even realize how. If you can catch these biases early, you're not only safeguarding your trades, you're protecting your long-term future in the game. The traders who stick around aren't the ones who never feel fear or greed. They're the ones who feel it, name it, and refuse to hand over control. You won't see it on your chart. It's not hiding in a DOM feed, an indicator, or some candlestick cheat code. But it's there, and it moves everything. Fear, the most powerful invisible force in trading. It's never on the news, never featured in trading webinars, and no YouTuber makes thumbnails about it. but it's in every tick, every twitch of price, every pause before you click that button. And here's what most traders don't recognize until it's too late. Fear doesn't always show up as panic or a racing heart. Sometimes it wears a mask. It shows up as just being cautious or waiting for more confirmation. You've probably felt it. You had a setup, a plan, everything ready, and then suddenly, thoughts creep in. What if it's a trap? What if unexpected news hits? What if I'm wrong again? And while you're debating with yourself, the opportunity vanishes. You convince yourself you were just being disciplined. You call it smart trading. Maybe you even feel proud for dodging a bullet. But deep down, you know exactly what happened. Fear made the choice for you. It wasn't logic. It wasn't data. It was your mind running from the discomfort of being wrong. And in that moment, fear took the wheel and became your strategy. Here's the issue. Fear is not your ally in this business. In everyday life, fear keeps you safe. It stops you from wandering down sketchy alleys at 3 a.m. or trying to pet a wild animal. But in trading, fear doesn't shield you from risk. It shields you from opportunity. It's the ultimate killer of potential. I remember observing a trader, let's call him Victor. He had technical skills most would envy. His charts were pristine. He could spot patterns, setups, Fibonacci levels with textbook accuracy. But his equity curve dead flat. Why? Because Victor avoided the trades that scared him. And here's the twist. Those were the trades that paid the most. The highest quality setups often appear messy and intimidating because big moves are usually preceded by uncertainty and chaos. If you're waiting for everything to look perfect and feel safe, you're already too late. Victor would map out his zones, analyze everything, and then freeze. His cursor would hover over the entry, but he couldn't click. Then, as the trade unfolded exactly how he predicted, he'd slam his desk in frustration and swear he'd take it next time. But next time never came, because fear doesn't just fade. It's not a bad house guest who packs up and leaves on its own. It stays until you force it out. Here's the harsh reality. Fear thrives in traders who avoid discomfort. It feeds on hesitation. Every time you surrender to it, it gains strength. Eventually, it rewires your brain to confuse risk avoidance with smart risk management. But here's the truth. They're not the same. Managing risk is saying, I'll execute the trade and accept the outcome. Avoiding risk is saying, I'd rather stay comfortable and not know. That's a massive distinction. Now, this isn't a call to be reckless. I'm not telling you to ditch your stop loss or go full send on every trade. But understand this, fear has no interest in your strategy or your edge. It's not logical. It exists to protect your ego, not your account. And this is what most traders refuse to admit. It's not the loss they fear, it's what the loss implies. It's the voice that says, maybe I'm not cut out for this. But let's be honest, you've faced worse in life. You've had bad investments, relationships that broke down, expensive mistakes, and you kept going. Those losses didn't break you. You moved forward. But in trading, one loss can feel like an indictment of your entire identity. That's the fear that paralyzes you. So what happens? You take fewer trades. You only go for the safest setups. You sit on the sidelines while your strategy works without you. Your edge doesn't disappear. You just stop using it. Fear doesn't ruin traders overnight. It wears them down slowly, one hesitation at a time. And here's where it starts to get even darker. Fear doesn't just stop you from entering trades. It can force you out too soon. You open a position, price moves in your favor. You rack up a few pips or points, then fear sneaks in. Take it. Lock in the profit. What if it reverses? So you close early, you secure a small gain, and then, as if mocking you, the market surges 200 pips in your original direction. You pound your desk. Say, I knew it. And wake up the next day ready to repeat the same mistake. Why does this happen? Because in that split second, locking in a minor win feels safer than risking for the big one. Fear convinces you that avoiding pain is more important than harvesting the full reward. And here's the cruel paradox. Fear never owns up to its role. It lets you scapegoat the market, your broker, news events, or manipulation. It lurks in the shadows while you keep blaming technicals. The real culprit, psychology. Here's the truth. Mastering fear is not about eliminating it. That's impossible. You're human, not a machine. Fear will always surface in trading. The difference between an amateur and a pro is not the absence of fear, it's how they relate to it. Professionals feel the same jitters. They hear the whisper, "Take profit now," but they act despite it. They've conditioned themselves to obey their strategy even when their emotions scream otherwise. And here's something few trading books will admit. The only way to do that is by proving to yourself through repetition that fear lies. You can't reason your way out of it. You can't meditate it away. You can't read enough inspirational quotes to make it vanish. The only cure is exposure. Take the trade anyway. Watch the outcome. Survive it. Realize the world didn't end. Do that enough times. And fear gradually loses its control. The first time you hold a winner to your target, despite fear begging you to take profit, you shift. The first time you take a loss exactly as your plan dictates, without chasing you, shift. The first time you follow your system perfectly for a week, without skipping, you shift. Fear shrinks when you confront it. It grows when you avoid it. So ask yourself, how many trades did you let fear talk you out of? How much profit have you left behind, not because your strategy failed, but because you failed to follow it? And more importantly, how much longer will you let that invisible market maker run your account? If you don't reclaim control, fear will be delighted to keep trading for you. And believe me, its win rate sucks. Let's be honest. By now, you've likely realized emotions in trading don't just visit, they live there. They have rooms, closets. Sometimes they even try to steer your decisions. The trick isn't to evict them, you can't. If you want to reclaim the driver's seat and keep those impulses riding shotgun where they belong, here's the truth. Emotional trading isn't just about fear and greed. It's about recurring patterns, and those patterns are more deceptive than you think. You don't wake up one morning and decide, "I'll sabotage my account today." It unfolds gradually, small self-justifications. Bending the rules just this once. Telling yourself, "I'll exit at my stop loss," then you don't. Step by step. Those exceptions stack up until you're no longer the trader who wrote the plan. So, how do we break the loop? First, you must recognize the cycle. It always begins the same way: a trigger. It might be a string of losses. It could be boredom, or the market moves without you. And that I'm missing something, heat creeps in. That trigger evokes an emotion: fear, greed, frustration, revenge. Before you even notice, your brain flips from logic mode to impulse mode. Suddenly, you're not trading your system anymore. You're trading your feelings. And feelings don't check the charts. This is where many traders go wrong. They try to fix emotional trading by refining their indicators, tweaking strategies, hunting for better setups. But you can't slap a fresh coat of paint on a cracked foundation and expect the house to survive. If you intend to break the loop, you must tackle the root: your emotional habits. One of the strongest tools is interruption. When you sense the trigger, your breath quickens and your shoulders tense. Your mouse hovers. Stop. Stand up. Change your posture. This may sound trivial, but think of it as yanking the plug out of the socket. You're stopping the emotional surge before it hijacks your decision-making. But there's a deeper layer. You must reframe your emotions. Fear isn't always bad. Greed isn't always evil. These feelings are data signals from your psyche. The issue isn't feeling them. It's acting on them unfiltered. The top 1% of traders don't pretend emotions don't exist. They simply refuse to enter a trade until the emotional wave has passed and their rational mind is back in control. Then there's identity. If you've internalized "I always lose when emotional," you're reinforcing that programming. Your brain seeks consistency between who you believe you are and how you behave. So instead, begin telling and showing yourself, "I am a disciplined trader who follows the plan. No matter what the market throws at me." That may sound like just words, but it's not. Every time you resist an impulsive urge, you're casting a vote for your new identity. Over time, that identity becomes natural. Breaking the cycle also means killing off the rescue "me now" mindset. That's when you take a loss and feel compelled to immediately fix it. That's not trading, it's gambling with extra steps. A disciplined trader understands that recovery comes through a sequence of good trades, not one giant swing. That change in mindset alone can spare you from a mountain of poor decisions. Now, let's address something many traders avoid: the emotional crash after a trade. Even after a win, you're vulnerable. You might get cocky and over-leverage, or feel entitled to throw discipline out the window because you deserve it. Both paths are traps. Wins and losses deserve identical treatment: analysis, journaling, and letting them go. The less you tie your self-worth to individual trades, the more emotionally stable you'll become. Another underrated technique is introducing friction into your trading workflow. Make impulsive trades harder. For example, to require a double confirmation before entry, or force yourself to write down the exact reason for the trade before clicking buy or sell. That extra step forces your brain to pause, not react. And never forget, the market will test your resolve constantly. The goal is not to become emotionless, that's impossible, but to keep your emotional state cool enough to think clearly. If you feel too charged, your best trade is to step away. You won't miss the opportunity. The market will still be there tomorrow, and the day after, and so on. Breaking this cycle is a long-term game. It's about steady habits, not heroic one-time acts of willpower. If you win the battle once, but lose it the next 5 times, the cycle continues. You need to accumulate enough small wins moments when you resist, wait, and execute correctly, so your emotional brain learns a new pattern. Emotions never vanish, but how you respond to them will decide whether you remain stuck in that destructive loop or build the kind of control that transforms you into a truly formidable trader in the best possible way. Here's the truth. Discipline is not forged during calm moments. It is built during storms. If you can keep your head when everyone else is losing theirs, you won't only survive, you'll thrive. There's one truth most traders refuse to admit, but I'll tell you anyway. Every losing streak, every account blow up, every moment you've looked at the chart and asked, "What's wrong with me?" It isn't random. It's not the broker targeting your stops. It might not even be news you missed. It's a chain composed of your past emotional decisions. Every small mistake you dismissed as just one bad trade is really another link in that chain. Unless you break that chain, you'll keep reliving the same nightmare, just with different candles on the chart. Most traders treat the market as an outside enemy, something to battle, but the real enemy. It's a loop quietly running inside your mind ever since the first time you clicked buy or sell. It's not just fear or greed in isolation. It's the emotional memory of all your past trades, merging into a pattern that governs your decisions without your awareness. Here's how it works. Imagine you once endured a huge loss. You convinced yourself it was a fluke. But when a similar setup appears later, that loss haunts you, so you exit early. Or perhaps you nudge your stop because you're terrified of that pain again. Or worse, you over-leverage to make it back fast. Suddenly, you've linked certain setups with specific feelings. Over time, your trading shifts from a deliberate decision to an unconscious reaction, driven by old wounds, not present data. That's why traders can see a chart formation they once profited from and then lose several times in a row. The chart didn't change. Their emotional baggage did. Here's the dangerous twist. The chain isn't built only from losses. Even your wins can tie you down. If one big win resulted from breaking your own rules, your brain remembers the thrill and nudges you to repeat that behavior. In effect, you've embedded bad habits into your subconscious. How do you break this cycle? Step 1. Ruthless awareness. Journal more than trades. Journal the emotions before, during, and after. Be specific. Did you feel panic? Excitement, boredom? A compulsion to act? Most skip this because it's tedious. But those who do often realize their true enemy isn't a chart, it's the emotional imprints of past failures. Step 2. Interrupt before the loop completes. When you sense early signs of emotional slipping like checking P divided by L obsessively or wanting to trade without plan, step away. Not for a minute until you reset. Some days, that means not trading at all. Yes, that's hard. Your mind will shriek about missed opportunities. But if you don't win that mental battle, you'll never win in the market. Step 3, where most fail. Replace the loop with something better. You can't just extinguish a pattern. You have to overwrite it. Create new emotional associations with your trading. Train yourself to feel calm instead of anxious when a setup materializes. To feel pride in walking away at your predetermined stop. To feel satisfaction in sticking to your rules, regardless of outcome, instead of letting anxiety take over when a setup appears. You teach your brain to stay grounded by performing the same pre-trade ritual every single time. Instead of spiraling after a loss, do you train yourself to feel proud when you walk away at your planned stop? No drama, no revenge. And instead of tying your emotions only to winning trades, you learn to feel just as good after following your rules even if the trade ends in a loss. Here's the hard truth. If following your plan doesn't feel better than winning by luck, consistency will always be out of reach. The market doesn't reward emotion, it rewards discipline. But your brain, it rewards whatever feels good. So if revenge trades or premature exits bring emotional relief, your brain will chase those over and over again, reinforcing self-sabotage. Breaking that loop isn't a one-time resolution. It's a constant to deliberate war against every shortcut your brain throws at you. And it will throw them. There will be stretches where you feel in control, only for one bad day to pull you back under. That's not failure. That's the process. The difference between traders who stay stuck and those who rise is this. The successful ones catch the slip early and break the loop before it becomes another link. And here's something rarely said out loud. These emotional chains don't stay in one market. Switching from Forex to crypto to stocks won't reset your psychology. If you haven't broken the internal cycle, you'll just rebuild the same self-destructive behavior in a new wrapper. The problem isn't the asset class. The real market you're trading is your own mind. I once worked with a trader who said, "It's like I carry the ghost of every old trade into every new one." And he was right. Until you confront those emotional triggers head-on, that ghost will keep whispering in your ear. But when you finally do break the chain, something surprising happens. Trading starts to feel boring. The dopamine highs disappear. So do the panic crashes. And ironically, that's when the money starts flowing steadily. Because you're no longer reacting to old wounds. You're acting in the moment. The market will still throw chaos your way, but when you've mastered your internal cycle, the chaos won't shake you. That more than any strategy or indicator is your real edge. So remember, every time you act from fear, boredom, frustration, to our ego, you're adding a link to that emotional chain. But every time you pause, stay calm, and follow your process, you're breaking one. Keep breaking enough links, and you get free. And when you're finally free, the market stops looking like a battlefield. It becomes what it's always been, a mirror. A mirror that reveals more than your technical skill. It shows your patience, to your discipline, Your capacity to rise above impulsive urges, break the chain, and the market stops being a battleground. It becomes a game you can actually beat. You've traveled far enough to realize that trading isn't about trying to defeat the market, it's about mastering yourself. But here's the catch. Most traders stop at controlling emotion. They believe that if they can just stop being afraid or stop getting greedy, they'll become winners. That's a rookie mistake. The real objective isn't mere control. It's turning emotions into your weapon, making them work for you, not against you. Imagine emotions as currents of energy coursing through your body. Most traders allow those currents to rock them like a boat in a storm, but elite traders harness those currents like wind in a sail, channeling them toward their goals. That distinction separates survivors from market casualties. Consider fear. To many, fear means exiting too early or hesitating when it's time to act. But a top trader transforms fear into a precise risk radar. Instead of panicking, they allow it to sharpen their focus, double-checking position size, stop placement, relevant news before entering. Fear becomes a signal, not a handicap. Greed is just as potent. When it's blind, impulsive, desperate, it destroys accounts. But when you discipline it, greed turns into ambition, the drive to execute with precision, to refine your edge, and chase consistency over reckless profit. A tempered greed is what drives a trader to study late, dissect losses rather than ignore them, and think 3 steps ahead. But here's what many don't say. You can't fake this shift. You can't just tell yourself, I've mastered emotions. You have to earn it through repeated exposure to the triggers that used to break you. That means putting yourself into controlled tension zones where the old version of you would crack, but the new you holds steady. I once mentored a trader, let's call him Elias, who embodied chaotic emotion. One day, he'd make $500. The next, he'd lose $600. Not because his system was bad, it was strong, but because his emotions ran the show. After a loss, he'd get revengeful, doubling trade size without thinking. After a win, he'd get euphoric, tossing risk management aside. When I told him we'll spend the next month working not entries but emotional discipline, he looked at me like I was nuts. Here's what we did. We gave him a strict $50 maximum daily loss limit, well below his usual scale. If he hit it, he had to shut down trading for that day. No exceptions. At first, he hated it. But over time, something clicked for him. Those days where he used to spiral into heavy losses, now he was walking away down just $50 instead of $500. That small shift added up fast. The second thing we did was even more important. We made him journal his emotions before every single trade, not just the setup, but how he felt. Was he tense, bored, overconfident? That single act of reflection changed everything. He started spotting emotional patterns, especially boredom trades. Random, low-quality entries, just because the market felt slow. Turns out, those boredom trades were quietly draining his account for months. Third, and this was key, we built controlled emotional stress drills. We deliberately put him in situations that used to break him, holding trades through mild pullbacks, walking away mid-trade for an hour, using microlots just to practice following rules without the dopamine rush of high risk. At first, it was brutal, but slowly, he rewired his brain. By the end of 3 months, Elias wasn't just managing emotions, he was using them. He could feel greed creeping in, and instead of overtrading, he'd channel that energy into study. He'd sense fear and use it to sharpen his awareness instead of letting it paralyze him. That's when he hit his first 10 consecutive profitable weeks. Not because the strategy changed, but because he did. Now you might be thinking, that's great for Elias, but I'm not him. Fair. But your emotions run on the same human operating system, and if you want to turn emotions into tools, You need a structure. Step 1. Radical awareness. You can't manage what you're not aware of. Most traders operate on emotional autopilot. They only realize they were revenge trading after the damage is done. You have to interrupt that autopilot. Slow down even when the market's moving fast. Do a mental check before clicking buy or sell. Step 2. Reframe the narrative. If you see fear as weakness, you'll try to suppress it. But repressed emotions don't disappear. They explode later. Start seeing fear for what it really is. Information. A warning sign. Maybe your position size is too big. Maybe your conviction is low. Either way, fear is data. Learn to read it. Step 3. Small-scale exposure. You don't build emotional strength by avoiding pressure. You build it by facing manageable doses. That means trading smaller during volatile markets, just to teach your brain how to stay calm under fire. It's like lifting weights. You don't start with 300 pounds. You start light and build up. Step 4. Reinforcement. Wins that come from disciplined execution, not random luck, are the most powerful reprogrammers. Every time you follow your process and get a positive outcome, your brain starts to link discipline with success. That rewiring is the root of consistency, but here's why most traders never make it this far. They want transformation now. Instant discipline, overnight confidence. One video, one journal, one aha moment, and they think they're cured. They believe that watching a single video on trading psychology will magically make them disciplined. That's like expecting one gym session to get you fit. The truth is, emotional mastery is a muscle. You must train it daily. Every trading session. And here's the part no one really mentions. Once you master your emotions, you stop needing the market for validation. You don't chase trades just to feel alive. You can go days without placing a trade and not feel like you're missing something. That shift in mindset is what makes you dangerous in a good way, because you start operating like a business, not a slot machine. The market is a master manipulator. It will reward bad behavior just enough to keep you hooked, and punish good behavior just enough to make you doubt yourself. Without emotional mastery, you'll fall into that trap again and again. With emotional mastery, you break free. You stop being the prey and start becoming the hunter. At that level, emotions stop being adversaries. They become tools in your toolkit. Fear hones your attention. Greed fuels your ambition. Frustration pushes you to sharpen your edge. Even boredom signals when to step back and recharge. This is when trading stops feeling chaotic and becomes an art. You're no longer reacting. You're orchestrating. You're reading not just price moves in the market, but your internal signals adjusting in real time. And once you can do that, survival isn't enough. You dominate. If you've followed along thus far, you've likely realized something essential. Trading isn't just charts and systems. It's about who you become along the way. Mastering your emotions in trading isn't only protecting your capital, it's protecting your life. The market won't pause for you. It won't slow down. It won't award you because you had a rough week. The market is a wild sea. Your emotional control is the vessel you sail in. Lose control of the vessel, and you drown. Master it, and you ride storms that take down others. This is about shaping a life so anchored that the market can't unsettle you because your foundation is emotional clarity, discipline, and stability. That's how the top traders last decades, while others burn out in months. You will lose trades. You will face losing streaks. You will see trades move in your favor only to flip in the last moment. Emotions will rise. That's guaranteed. But the goal isn't to become some emotionless robot. That's denial. The goal is to feel them fear, greed, doubt yet not obey them. Emotional mastery means feeling, recognizing, and still acting by your plan, not your panic. Watch yourself in those moments as if observing another trader. You'll find freedom there. You'll tell yourself, yes, I feel afraid, but that doesn't force me to act afraid. That distinction separates the trader who lasts from the one who blows up. Most traders fail because they treat trading like a separate compartment disconnected from life. That's like running a marathon while eating junk food, sleeping 3 hours a night, and never training. If your life outside trading is chaotic, that chaos bleeds into your trades. If your relationships drain you, your health deteriorates, or you're financially stretched, your emotions will hijack every decision. To master your emotions, you must structure your life around equilibrium and mental clarity. Sleep well so your mind can handle volatility. Keep yourself fit. Fatigue and poor diet destroy discipline. Cut out needless drama. Build a financial buffer so you aren't trading with anxious money. Emotional mastery begins the moment you wake, long before you open a chart. Most traders chase results instead of identity. But results always mirror identity. If your identity is, I'm a risk taker who hopes for the best, your trades will reflect that. If your identity is, I'm a disciplined trader who follows rules no matter what, your actions will align accordingly. Define your trading persona. Write it down. Are you calm, methodical, strategic, resilient under pressure, even if you're not those things now? Write them as if you already are. The more you reinforce that identity, the more your brain pushes your actions to match it. If you tell yourself, I am disciplined, breaking the rules feels like breaking yourself. Here's a dangerous trap: trying to control the market. You don't control it. You control your reaction. Accept that price will move unpredictably. Accept that setups sometimes fail, even when you did everything right. This mindset frees you from fear and greed, because you stop imagining a world where the market must bend for you to win. You focus on execution, not on the outcome. Fear will appear. Greed will appear. Doubt will appear. That's inevitable. But mastery isn't about evicting those feelings. It's about acting in spite of them. Picture placing a trade, fully aware it might go against you and not letting that knowledge paralyze or rush you. That's power. That's freedom. That's the difference between traders who last years and those who quit in months. Discipline isn't punishment. It's liberation. Every time you obey your rules, regardless of how you feel, you reinforce your identity as someone who can survive uncertainty. Every time you take a break after a loss, resist overtrading, or stick to your plan under pressure, you build an unshakable foundation. Emotional strength compounds, just like profit do. It grows quietly, beneath the surface, until one day it becomes your most powerful asset. Mastering emotions also means managing expectations. The market doesn't owe you a win today, tomorrow, or ever. Expect losses. Expect volatility. Accept that every trade carries risk. When you remove expectation, fear diminishes and clarity rises. When clarity improves, your decisions get better. When decisions improve, results follow. This is the virtuous cycle most traders never experience because they refuse to face reality. Another often overlooked quality is patience. Markets are patient. They'll wait for you, the prepared trader. If you rush, if you force setups that don't exist, you'll pay for it. The most successful traders aren't those who trade the most. They are those who trade when their edge is clearest, when probabilities favor them, when their nerves are steady and their process intact. Patience becomes the supreme weapon against fear and greed. Take a moment to reflect on your progress. Emotional mastery is a journey, not a destination. Some days, everything aligns, and other days your mind feels like a battleground of doubt and anxiety. The key is persistence. Keep practicing. Keep observing yourself. Stick to your rules. Refine your identity. Over time, you'll see the shift. You'll find yourself reacting calmly in situations that would have broken you months ago. You'll see fear and greed still arise but no longer control you. You'll experience a freedom few traders ever attain. Remember, this trading isn't life, It's a mirror. It reflects your strengths and your flaws with brutal clarity. Use it to grow, not just as a trader, but as a human. Master your emotions here, and you'll see improvements elsewhere in life. In relationships, in work, in personal growth, in decision-making, emotional control is universal. The skills you develop through trading carry into every challenge, conflict, and high-pressure scenario. The market will always test you, but life will reward you for true mastery. Every trader faces moments when fear, greed, or doubt whisper louder than logic. The difference between those who thrive and those who crumble is simple preparation, awareness, patience, and firm identity. You can train yourself to watch your emotions, to detach, to act intentionally rather than to react impulsively. You can design a life that supports clarity. You can accept what you can't control. You can focus on process over outcome. You can embody the identity of a disciplined, patient, serene trader. You can master yourself, and once you do, the market loses its power over you.